Hey, good morning everybody. Today is Wednesday, September 21st, 2016. Happy fall. My name is Cliff Backus and this is your pushbuttonstocktrading.com daily video market review. I want to get started today by taking just a quick look at the Russell 2000, but before we do that, Tuesday was a bit of a disappointment for the bulls. Markets started the day with a nice rally, but erased most or all of it depending on the index that you look at. In the exact opposite of Monday's market action, both the S&P and the NASDAQ composite managed to hold on to small advances after giving up sizable early morning gains, while the small cap S&P 600, mid cap S&P 400, the IBD 50, the IBD 8585, and the Russell 2000 all closed lower for the day. Both the NASDAQ and the S&P recorded inside days as we await results of the two-day Fed meeting that wraps up today. An inside day is a trading session where a stock or an index trades with a lower high than the prior day and a higher low. An inside day generally tells us little about market direction. Trading volume was lighter. The NASDAQ closed near the bottom of its daily trading range, up 6.52 points or 0.12% at 42.41, and remains bracketed by support in the 51.90 area and resistance at its all-time high in the 52.87 range. The S&P, which has been consistently weaker than the NASDAQ for the past few months, after again challenging and failing at minor resistance in the 2150 area, closed up 64/100ths of a point or 0.03% at 2139. According to our count, in the past month the S&P has posted 6 distribution days, the NASDAQ 3. The distribution for the S&P continues to cluster on the right side of the chart, which is a concern. That noted, yesterday, our market timing model switched to an aggressive buy signal when the number of stocks in the S&P Composite 1500 trading above their 9-day moving average bettered those trading above their 50-day moving average. An aggressive buy signal indicates that our most aggressive traders can buy stocks but shouldn't be employing margin at this point. More conservative traders should continue to accumulate cash. According to investors.com, the market's in an uptrend under pressure with a distribution count of 4 days on the NASDAQ and 8 on the S&P. Often investors.com count is higher than ours due to the way they account for the time distributions relevant. Declining issues topped advancers by a 5-4 margin yesterday. New highs bettered new lows. Small capitalization stocks bettered large and continue to outperform on a 10-day moving average basis. The bulls prefer to see small caps outperform. Our market timing model has switched to an aggressive buy signal. That noted, we have a very important meeting of the Fed that concludes today. We'll probably get a bit more clarity in the market after that. Aggressive traders may want to wait until after the Fed announcement at 2:15 New York time to see the market reaction before making trading decisions. For now, traders should continue to have their stops at their tightest levels, and at least conservative traders should not be adding to positions. What I wanted to point out with the Russell 2000 is yesterday we were down 4.2 points or 0.34%, but importantly, although we closed at the bottom of our daily range, we did hold support at the 50-day moving average. I think the Russell 2000 is the key to the market going forward. As long as we can continue to hold that support area at the 50-day moving average, I think we're in pretty good shape. In fact, if we were to break below that and still continue to hold support down here in the 1205 range, I think that the market overall would be in pretty good shape. Let's take a look at the NASDAQ composite. The NASDAQ yesterday was up 6.32 points or 0.12%. We closed at 52.41. Note we closed near the bottom of the daily trading range. That's a little bit of a disappointment to the bulls. The bulls would prefer to see the NASDAQ close higher in its daily trading range. Trading volume yesterday was below the prior day and just about average. For you followers of William O'Neill, we are in an uptrend under pressure. We've been in an uptrend since June 30th. We have 3 distribution days in the past month. And while we do have a little bit of clustering here, we're not really seeing a lot of clustering on the right side of the chart. I don't think that distribution on the NASDAQ is that much of a concern. Keep in mind that distribution on the S&P 500 certainly is a concern. Right now, our market timing model is on an aggressive buy signal, which indicates that aggressive traders can buy stocks but shouldn't be employing margin at this point. More conservative traders should continue to accumulate cash. The NASDAQ composite is bracketed by support down here in the 5189 area and resistance at its all-time high up here in the 5287 range. Quick look at the S&P 500. S&P yesterday was up 0.64 points or 0.03%. We closed at 2039. Note how we closed at the low of the daily trading range. We tested and failed at this minor resistance in the 2150 range. Also note that the high for the day was lower than the high of the prior day, and the low for the day was higher than the low of the prior day, which gives us an inside day. Inside day doesn't really tell us a great deal about what the market's doing. And so this close at the lower end of the trading range really isn't as much of a concern as it might have been if it hadn't have been an inside day. Trading volume was very light, below average, below the prior day. The S&P remains in an uptrend under pressure. We have a lot of distribution on the S&P and a lot of distribution clustering on the right side of the chart. That's a concern. Our market timing model on the S&P is on an aggressive buy signal. Let's take a look at our position trades. Right now we hold 5 position trades. Alibaba, BA, which we bought when it gapped out on earnings. We paid $85, trading right now for $101.45. ACIA, we've bought a couple of times and continues to put in this little basing pattern right here. We may be able to call this a flat base. Certainly we can call this a flag pattern, and a break above this level right here would be a good place to add to our holdings with ACIA. Next we have Zimmer Biomet, ZBH. We hold GKOS, Glaukos Corp, which we've bought on a couple of occasions. And finally SUPN, which we've also bought on a couple of occasions. That stock appears to be acting well right now. I want to take a look at HWAY again, Healthways. Yesterday we talked about the possibility of Healthways breaking out of this high tight flag formation. Note how we broke out yesterday. It was a fairly violent breakout and we fell back into the base. The reason that I expressed concern about this yesterday was this formation is very obvious to the CanSlim community. A high tight flag is a very aggressive formation, stock formation, generally leading to significant gains. And so when it becomes obvious to the CanSlim community, typically what happens is the stock breaks out, everybody piles in all at once, and you have a spike up followed by a return back into the base. Typically the second time that the stock breaks out of that high tight flag formation is the best time to buy it. And so we'll continue to watch Healthways. Healthways provides health prevention and well-being services based on risk assessments in order to cut healthcare costs. And we'll watch for the stock to break above this $26 buy point. I want to take a quick look at our swing trade model. Yesterday the NASDAQ Composite closed a little bit higher, but importantly, it closed above its 10-day simple moving average, which we show here in green. It closed above its 5-day simple moving average, which we show here in pink. And the 5-day right now is trading above the 10-day, which is our definition of a buy-long signal. And so swing traders can begin to buy long at this point. Running through our current swing trade holdings, we have 5 positions. OLED, which we bought on the break above the 200-day moving average, had a tough day yesterday. NVDA, which we bought on the bounce above its 50-day moving average, also had a tough day yesterday. AVGO, which we bought on the break above its 50-day moving average. Yesterday it came back, challenged that 50-day. If we don't close higher today, we'll probably get rid of Broadcom today. IPHI, we bought on the bounce off of the 50-day. And finally, PE, which again, we bought on the bounce off of the 50-day moving average. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohannes & LaCours Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohannes & LaCours Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohannes & LaCours, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes & LaCours Incorporated believes to be accurate. Ohannes & LaCours Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources except where otherwise noted, and data we believe to be reliable. Ohannes & LaCours, Inc., its affiliates and subsidiaries and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push Button Stock Trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.